the CLS Weekly Market Review. I'm Todd Clark. Last week, global equities were positive only one day. Despite the falling stock prices, bond yields closed the week slightly higher. On Thursday, Federal Reserve Chair Janet Yellen once again spoke of rising rates in 2015. Her speech, on top of stronger economic data, drove yields higher. In the media of late, we're hearing the R word again, recession. It seems to be a common topic of discussion, and it's left us at CLS wondering about the chances of a recession in our current environment. For more information on that, here are Kostya Edis and Grant Engelbart.
Thanks, Todd. So, Grant, I'm going to just start out real blunt. Are we going into a recession?
Wow. The quick answer is no. Economic data recently has been looking positive. We have a gauge. You can see the actual chart in the PDF. 24 of 27 indicators are on the positive side, which is one of the highest levels. Despite what we've heard in the media recently, a lot of people predicting recessions in the next few years. Of course, a recession will occur again. That's inevitable. But in the near term, we don't see that. That's important because 20% corrections in the market, what's defined as a bear market, has only occurred during a recessionary time, except for two kind of fluke instances in the past 100 years.
Okay, wow, that's great. But speaking of crashing and burning, all I've been able to hear about this week is Volkswagen. What the heck is going on over there?
Yeah, the scandal with Volkswagen really shouldn't have much of a market impact, but it's garnered tons of attention in the media, and obviously it hits home with a lot of people that have Volkswagens or see them on the road. There are a few lessons, though, that I kind of picked out of what's happened. The first being that markets are truly global. In diesel vehicles, the catalytic converter contains more platinum than in a gasoline vehicle. So the platinum market really took it on the chin this week, which hurts the South Africa market. So it's really a global, the world is very interconnected, and so you should take that approach to investing. Second is quality. Management quality is obviously really hard to attain. We've seen this before where a great company or seemingly great company shows up with these kind of issues, but you can still use certain measurement tools that we use to assess management quality. And finally, single stock risk. We preach diversification day in and day out. Single stock risk really isn't worth the risk. Diversify through an ETF and through funds and get that single stock risk diversified away.
Interesting. Thought platinum was only used in wedding rings, so that's very interesting to know. But let's shift to something a little more positive. How has the ETF industry been doing this year?
Great. So 123 ETFs have been launched this year, net of any closures that we've seen, which is more than last year, and we still have a full quarter to go. And there's been a lot of trends that we've seen in the space that I highlight in the piece that kind of, you get an idea of investor psyche through those trends. One of the most important trends I think that we've seen is the launch of ETFs by some really big name banks and mutual fund companies. So Goldman Sachs and Principal both came out with ETFs this year, JP Morgan last year, and then filings for ETFs or ETMFs. We've seen filings from Legg Mason, American Funds, Janus, and a few other names that are big in the mutual fund space, and they're starting to embrace ETFs. So that's very positive for the future of the ETF universe.
That's amazing. Great to hear. And thank you so much, Grant. Thank you for watching, and see you next week, and go Huskers.
Yeah.